All right, welcome back everybody. My name is Signet, and in this video we're going to talk about Market Watch. We're going to talk about what we watch and why we watch those things and when we watch those things. All right, sounds pretty good. So we want to have an idea throughout the trading day and in the evening or before the market opens what's going on in the indexes, in the futures indexes, and in the sectors. We want to have a really good idea within those equity indexes, what's happening in the SPX, the NDX, the RUT, and the DJI. That's the Dow Jones Industrial Average. The SPX is the S&P, the NDX is the Nasdaq, and the RUT is the Russell. Now from there, in the mornings, when I get up, I like to take a look at what happened in the overnight hours. The market around the world is just like our market here. They have central bankers. They've got to worry about inflation. They have job numbers, unemployment, construction, spending, manufacturing, delivery, transportation, import, export, everything that we have. So they have all the same economic events. Maybe it has a different name or a little bit of a different impact, but a lot of the same economic events happen all around the world, including pre-market, after hours, intraday trading. So in the overnight hours, while we're sleeping, those markets are open around the world, and when we get up, we want to have a really good idea what happened last night, and is there anything important going on that we may need to know about? Well, we can see that reflected in the price action. These names here are showing futures markets from around the world, and we just want to have a quick glance at those in the morning to kind of get an idea of what happened. Sometimes it's the chicken and the egg syndrome, which comes first. If the United States market goes into the close in a really strong rally, we could see that in the overnight hours, that they would be buoyed and would float off of our really strong run. The same thing can happen the other way around. If we had a really bad day, they can have a really bad day. Or some news in the middle of the night could galvanize their markets and send them skyrocketing. And we would often see that the next day in our trading day, right? So sometimes we cause their markets to move, and then sometimes they cause our markets to move. Either way, we want to look at them in the morning and see what's going on. Then there are the other indexes, the volatility index, the bonds index, precious metals, and that covers a lot of them. I just kind of round them up into all of them, right? Gold futures, silver futures, palladium, kind of the gambit, silver. And then we got the dollar. Now, getting into the dollar can really drag us down a whole list of things because there's our dollar and then there's overseas dollars on FX markets. But we just look at the US dollar. So these other indexes, we can use the VIX, TLT, TYX, GLD, SLV, $ DXY. And I say $ because when you're on Thinkorswim, if you add that $, you'll often find different products than if you had only typed in DXY. In the futures indexes, we've got the S&P, the Nasdaq, the Russell. We got the Dow, the VIX, and the bonds. So let's kind of sum all that up a little bit. We have indexes. We have futures on the indexes. We have volatility markets. We have bond markets, precious metals, and in the new world that we live in nowadays, we really got to keep our eye on those digital currencies too. If Bitcoin is running or if Bitcoin is falling, we really need to know what's going on there too. We have FX markets, sectors, and then a very new futures product called the Smalls Exchange. Now, not all brokers carry a small exchange. Thinkorswim does not carry the Smalls Exchange. We would have to go over to our futures broker or maybe to Tastyworks to see that. All right, so then we have market breadth studies. Once the market is open on the intraday basis, tick, trend, U-vol, and D-vol, the advanced decline line, And that's really the end of the spreadsheet or this PowerPoint presentation. And at this point, I'm going to just jump over to the Thinkorswim platform and kind of walk through these uh, different markets that we've talked about at this point. All right, so a really good place to start is the S&P. We've got the SPX pulled up. This is the S&P 500 index. Now, I'm not going to go through in depth on every single one of these. It may be a good thing if you're newer to trading that you use this video to go forward on your own and research every one of these individually to kind of have a broader grasp of what I'm introducing, because I'm just going to hit the highlights here. The S&P is what I think about when I'm looking at a broad outline of like the overall market. Back in the day, maybe people really focused more on the New York Stock Exchange, but for me, it's the SPX. If I want to have a broad outline of what's going on in the overall market, this is where I go. From the SPX, we have the INDX. Now, I really consider the INDX the tech index. So if I want to know what's going on in technology, or it does have other parts in it, what it does not have in the Nasdaq 100 are any financial companies. So in my mind, I do think of this as technology and representing technology, but not only technology, but definitely not finance. To be able to kind of get a better idea of what might be in here, come over and look at Market Watch, bring up the Nasdaq 100, and you can see some of the names in this list: Apple, Adobe, Autodesk, Baidu, Google, Fox, Kraft Heinz. Now we know Kraft Heinz is nothing to do with, technology, but it's still in the Nasdaq. There's no financials in here, not in the Nasdaq 100. So we've got O'Reilly's, Pepsi, PayPal, Paycom, all these different companies, Expedia, that might not necessarily be technology, but they also are not technology, right? So quite a good list of names in here. There's retail, just kind of across the board. But for me, number one above everything else, when I think of what's going on in the NASDAQ, I'm thinking of what's going on in the technology sectors. Then there's the RUT. There are three RUT. There's the Russell 1000, the Russell 2000, and the Russell 3000. Generally, I look at the Russell 2000. This would be a representation of small cap companies. All right, so when I see this running, I'm thinking that this is everything that wouldn't go into my mega cap companies like the Dow Jones, which we're going to go to next. Right, so Dow Jones Industrial, Thinkorswim. You got to be careful with how you put it in there. So the DJI, or the Dow Jones Industrial. Here we go. And this would be a representation of your mega cap blue chip companies. Companies that's been around for a long, long time and carry a very large market cap. We can see the names that are in this list. And in every one of these are pre-built watch lists on the Thinkorswim platform. I didn't build them on my own. So here's the Dow Jones. You can get to that when you go to the public watch list. Just scroll up to the Dow Jones Industrial Average. And I believe that most of you will probably recognize the names that are in here, even if you might not recognize their symbols. Right? Even if you're new to trading, you've probably already heard of Verizon and Coca-Cola, Visa, MasterCard, Home Depot. There may be one or two names you've never heard of, but for the most part, these are going to be names that are very familiar to you. McDonald's, Procter & Gamble, Chevron, Johnson & Johnson. These are very familiar names. So these would be more of your blue chip mega cap companies, right? And those are the four major indexes on the equity side. But then we've got like the VIX index. Now there are a lot of VIX indexes worth looking at. There's the 3-month, the 9-day. There's all kinds of different ones in here. The easiest way to go when you're first starting out is just look at the VIX. If you are particular about which volatility you're looking at, step into a lower time frame by using the volatility futures. And we'll get to those in a moment. So there's the VIX. Next, we can cover the bonds. So there's the TLT. This bond here is the 20-year. This is a good representation of the overall bond market. And there's another one which is not quite as often used. It's a 30-year bond. And when it comes to bonds, there are a lot of different ones. But this would be not necessarily an index, just a particular bond name. Right now, we can go in and kind of look at what they may have for an index in the bonds. When it comes to bonds, typically I just look at the futures bonds. But we can come in here and we can go to indexes and maybe kind of scroll up till we get into the Bs and see if we can find a bond market. And I know that there is one in here. It's just not one that I'm very comfortable with looking at. So this is the 20-year bond index. Notice the other one, the TNX, we were looking at the 20-year bonds, and this is the 20-year bond index. So there is an index. It is worth taking a look at. Either way it goes, and no matter how you do it, whether you're looking at the index itself or one of the currencies off of it, like the 20-year, the 10-year, the 30-year, you want to be looking at the bonds. Bonds are a reflection of government debt, and they are also a reflection of our interest rates against the banks. When the bonds are on the move, technology is under pressure, or the financials are under pressure. And it's a delicate balance to kind of weave those two together. So those 6 markets that I just went through as indexes are also covered in the futures markets, which is how I tend to look at them on these 6 grid right here. So we got the S&P, we've got the Nasdaq, we've got the Russell, the Dow, the volatility futures, and the bonds. And in this 6 grid right here, I've got a very strong understanding of what's going on in the intraday marketplace. These markets are also open 22 hours a day, so throughout the trading night and into the morning, I've got a very clear idea of what's been going on and where we're at. When I'm evaluating these over the weekend, it's kind of trying to get a broader picture of the big plan, and I will go out to a daily and a weekly and even a monthly chart. During the week, I tend to stay somewhere between the 5-minute and the 30-minute, and more often than not, I have these charts set at a 15-minute. Right, and the idea is, where are we on the day? Are we within yesterday's trading range? Did we break outside of yesterday's trading range? Are we above that level or below it? Are we going to hit something? Did we bounce off of a major moving average? Are we moving towards a major moving average? When the bonds made this aggressive move to the downside today, you can see that the S&P market also made an aggressive move to the downside today. At the same time, when it made this move to the downside today, the Nasdaq technology made a move up. In that move to the downside today, it shook or rattled investors a little bit, and that brought the VIX up. Now keep in mind that the VIX does not move our marketplace. The VIX moves in reaction to our marketplace. There is some kind of trading going on that indicates some kind of indecision or fear within the market, and their trading activity bids this futures product up. All right, so this will never cause a market to move over here. Whatever's moving over here causes this to move. All right, so this is going to have to be part 1. I don't want these videos to be really long, but so far we've covered the indexes and the futures indexes, and we will continue in the next video with the sectors and precious metals and all of those other things. Hey, I appreciate your time and look forward to seeing you at the next video.